Well, yesterday the SEC in the USA issued Coinbase with something called a Wells notice, basically meaning that they are coming after Coinbase. Also really big news for the Polygon ecosystem, for Bitcoin, the latest from the Federal Reserve, and more, so make sure to stick around and get all the goods. So Coinbase, let's talk about it. The SEC is claiming that staking is a security and that the staking services Coinbase is offering constitute securities, much like they did with Kraken earlier this year. They're also arguing that some of the assets, or maybe even most of the assets listed on Coinbase, could be securities. But just consider how dumb this all is. It drives me crazy, this story, because Coinbase is a regulated company. The SEC literally approved the company to go public 2 years ago. They reviewed their entire business model, including staking. They also reviewed the assets that they list, and the SEC approved Coinbase to be able to go public and sell their stocks. With all that in mind, nothing has changed between that time and now. The business model at Coinbase, it's exactly the same. Now, however, the SEC is coming and saying, hey, you know what we told you 2 years ago? Yeah, we kind of changed our minds on that. You're actually breaking the law right now and you're in big, big trouble. Remember that Coinbase has been asking the SEC for years on some kind of clear guidelines. Coinbase is like the most regulator-friendly crypto exchange out there. They want to comply, but instead of actually engaging with Coinbase, the SEC instead decided to take Coinbase to court, not giving them any clear answers. Apparently, Coinbase has met with the SEC more than 30 freaking times in the last year, and during all of those conversations, during all that time, the SEC gave no feedback on how they could change their business to be more compliant with what the SEC wants, or even how to register. What a failure by the regulator. The SEC is simply an anti-crypto organization at this point. Many regulators around the world have actually come out and given clear guidance and approvals to Coinbase. But the USA, the home of Coinbase, continues to make doing crypto business in the USA as difficult as possible. It's dumb. The good news is that Coinbase is not taking all of this lying down. In fact, Coinbase is vowing to fight this all in the courts. And I stand with Coinbase on that. You guys go get it. I personally think the chances of winning are pretty decent considering all the different facts and what I've read about it, but we'll see how it plays out in the courts. Also, other jurisdictions will be just out there, I'm licking their lips in anticipation of how bad the USA is screwing up on crypto regulations. In fact, it just came out yesterday that Coinbase just got regulatory approval over in Brazil. Now, this is a country that has been providing actual regulatory clarity for cryptocurrency investors and companies that want to do business there. They have been adopting cryptocurrency, passing legislation to allow it to be used as currency within the country, allowing their citizens to have Bitcoin ETFs. Crazy. America, what are you doing? Also look at the UAE. They're trying to become the crypto capital of the world, or the United Kingdom, which is now actually looking to pass sweeping reforms, positive reforms, by the way, to their cryptocurrency legislation. Also, tinfoil hat moment here. The crypto crackdown combined with the banking crisis is the perfect time to roll out those Orwellian slave money central bank digital currencies. Think about it. Crypto is scary. Crypto is not safe. Use your CBDCs instead. Anyway, clearly at the then they fight you stage of crypto adoption. Exciting, but a little bit frustrating and scary at the same time. Now let's talk about the Fed. The US has done it again and increased rates by another 25 basis points. Anyway, this means interest rates now sit within a range of 4.75 to 5%, which is in line with general expectations. It's also a 16-year high. The Fed has signaled that one rate hike is likely left in this cycle, but they're not promising the bulls too much at this point. Jerome Powell came out and reiterated that they are ready to use whatever tools are necessary to protect the banks and to bring down inflation to the 2% target. You can almost hear the money printers going in the background, can't you? And the Fed has made it clear that there are no rate cuts planned until 2024. We'll see. I'm not sure the market quite agrees with that. That's just what Big Daddy Jerome is saying right now. So it seems for now the Fed is staying the course and that they need something else to break before we see a pause. You know, breaking the banking system, that wasn't enough. They want to lose your job too. And by the way, the Fed has now reversed 2/3 of their tightening efforts of what they've seen over the last year as their balance sheet just explodes with hundreds of billions coming onto that balance sheet as they attempt to combat this major banking crisis in the USA. Total insanity. Next, let's talk about the Abritrum airdrop. They've finally done it. They've launched the ARB token with an airdrop to the community for people who use the Arbitrum network. The launch didn't go completely to plan. There were some, little bumpity bumps along the way as the site crashed due to just, people flooding into the site, which I guess is a good thing, shows a lot of demand. Now in the build up to the launch, the network actually saw a record number of transactions happening and unique addresses with over 1.3 million transactions on March 21st, up from 1 million on March 20th. That's like what Ethereum does on a single day. It's crazy. In just the first few hours after the launch, we've already seen 300 million ARB tokens being claimed by over 160,000 different addresses. Prices actually went as high as $10 for like 1 second. One dude sold the $10 top, but that's about it. Although the price did fall pretty fast after that. It's about $1.50, something like that, time of recording. But can we just take a moment of silence and pour one out for the panic buyers who FOMO'd into the listing hype? And congratulations to all of you who took the chance to get some free money by participating in this airdrop. We've only been talking about it nonstop for like a year. I feel like I must have mentioned this like 10 times in the newsletter and here on the YouTube channel and over on Twitter. We also included step-by-step guides on how to bridge, how to use Abritrum DeFi and all that stuff in our free newsletter. Now, if you missed out on this free money, then you should definitely get signed up to the newsletter so you stop missing out on future opportunities. We don't just cover airdrops, though. We talk about NFTs, DeFi, altcoins, and so much more. Join our more than 60,000 weekly readers and sign up for free using that link down below in the description. Now let's talk about the Hong Kong crypto news, because China is back, baby. Hong Kong has announced two big things this week. First, that it is going to allow retail customers to be able to buy Bitcoin ETF products. Now before we knew they're going to let them buy crypto, but now they're also saying, yeah, you can buy the ETFs too. Nice. And second, that it's going to be spending $50 million to make Hong Kong into a crypto hub. This is a massive departure from its previous stance, and it is potentially a monumental change in the approach of China in particular to crypto, but big for East Asia. South Korea and Japan are pretty closed markets. Because remember, in China in particular, while it's a one country, two system policy, there is actually very little chance that Hong Kong would be doing any of this stuff without the blessing of Beijing. In fact, news reports have said basically as much. They got a wink, wink, nudge, nudge from Beijing. The floodgates of Chinese liquidity could be opening up and coming back into crypto. Next, let's talk about Polygon. Polygon has issued out its first bonds without actually any banks for the Swiss trading firm Muff Trading AG. Now, the company is a physical commodities trading firm that used its own DeFi platform called Obligate to actually sell these tokenized bonds. Now, Obligate is a fully regulated intermediary in Switzerland, meaning that it allows companies to bypass the traditional banking system and then to issue out bonds and different commercial paper products using the blockchain, man. The bonds were entirely funded by USDC stablecoins and didn't rely on any fiat payments or settlement rails at all, strictly crypto. And investors will end up, of course, receiving the ERC20 tokens into their crypto wallets that actually represent that real world asset, the bond. Now, the details about the bond size and the terms being kept a bit shh at the moment, but this news follows on from German industrial giant Siemens issuing am I saying that right or am I saying the dirty thing? Siemens. Anyway, issuing a $64 million bond on Polygon last month. Now, slowly but surely, we are seeing the traditional finance world come on chain, and that's very, very, very exciting. There's trillions of assets that are going to come onto the crypto chains. Now let's talk about Telegram, which is proving that social media platforms are the banks of the future. Elon Musk has said as much. He wants to do the same thing with Twitter, but right now we're talking about Telegram. Tether's USDT has been added to Telegram's wallet bot, allowing users to transfer the stablecoin within chats that they're having. Now, USDT runs on multiple blockchains, but for now, the guys over at Telegram, they have chosen to only support transactions running on the Tron network. Now, this is an expansion of Telegram's initial crypto-related services. They do already offer some crypto stuff. Last year, Bitcoin and the Ton coin were added onto Telegram's wallet marketplace, with the Ton coin also available to be able to be sent within chats for users. Now, with more use cases like this, sending crypto is going to become as easy as sending a photo to a friend, and the two can literally be done together in seconds. That's pretty awesome. Okay, that's it. Subscribe now. See you next time.